to the Trading Market Technicals morning call video for Friday, October 18th. Another big day in the markets. Follow through from the resolution of the fiscal cliff. Dow down 2. That was due to IBM reported earnings. IBM was down pretty much all day. Nasdaq up 23, S&P up 11, and Russell up 9. Big move in the markets. Greed at its finest, and that's fine. Markets continue to move up. Believe we're up about 5.5% from last Wednesday. That is a huge explosive move to the upside. I was looking for more of a sell the news type thing. That did not happen. And again, nothing tradable. Just like to put some hindsight, some thoughts into what could possibly happen, and then obviously be prepared for both sides. But I do think that the markets are now a bit stretched. The McClellan Oscillator, which is in front of you, obviously has a little bit more room to the upside, and it does. But I would be definitely tightening up stops if you are long this market. Markets can turn around and violently reverse at any given moment. Not that there is really anything much to have the markets to sell off, but a good profit-taking rally is to be expected. Now, we're coming out of seasonal weakness this week, and going into next week is usually, that's pretty much it. So if we can get another pullback, if the pullback's shallow, I think you can buy into this going into the end of the year. Now remember, I believe it was the beginning of the week or last week, I also mentioned fund managers are underperforming the market. So they're going to have to put some money to work rather quickly to play catch-up going into the end of the year. So it's something to think about for the bullish case. I don't think there's much of fear going into the market as far as any type of risk to the downside, other than the fact that we're overbought. And again, that is not a sell signal, but you want to let price tell you that, okay, the markets are now a bit stretched. We're coming into some heavy resistance, and if the market does in fact roll over, then it's something that you can look to either put a call credit spread on, buy some puts, and I mind you, puts are really, really cheap now. I'm a big advocate for hedging portfolios. So if you are long this market looking for higher prices, there's no reason why not to buy some puts for some insurance. Very, very cheap. Okay, so we have the McClellan Oscillator, and as you can see here, we are not quite overboard as of yet. We're still in the neutral phase, below 60, above 60. So once we start breaking out of here, which we probably could get some follow through today, would not be surprised the markets move higher yet again. There's just now this whole euphoria of buying. Remember, greed at its finest. So we continue to move up, and then we'll see what happens. Maybe we get a push up, and then Monday, Tuesday, a little bit of selling or some sideways consolidation or slightly drifting lower is normal for the market. It's actually quite healthy. As you can see, when you have the markets rolling down 13 out of 15 days in a row, and then explosively running back up 5 days in a row, up 5.5%. That's a big move in a relatively short period of time. All right, so we got the McClellan Oscillator, and what I wanted to show you was a couple of the bullish percent charts. Here's the bullish percent SPX, and this went on a buy signal yesterday. So we are now back at a buy signal, but the only reason why I don't like this as opposed to this is that at least we have a decent move. We pull back. We got a buy signal here instead of here. So I would just be cautious about this if you do follow the bullish percent SPX. Not that it can't move higher. Remember, we start breaking out. We actually made new highs in a lot of the sectors. So just something to keep an eye on, but we are on a buy signal. The bullish percent XLF, the financials with the XLF. This one on a buy signal here. As you can see, these are some of the major turns in the market. Here's some whipsaw. And here we had this move up. So you can see that this is actually a very reliable indicator. And we are now at its highs as well. And relatively at 80%. So, I mean, I would have liked to see this a little bit lower and turn back up again. But nonetheless, we were sideways while the market moved up. And then all of a sudden, we caught that move, that 8, and then we broke higher here. So, another good sign for the markets if you're a bull. Now, let's take a look at the VIX. VIX literally just got decimated. There is absolutely no volatility, no fear in the market, and we are coming back into these long-term support line from 2013. So another big push lower, and if we can get outside the Bollinger Band, that might in fact signal some sort of weakness to come in equities. As we all know, this is inversely correlated, so just keep that in mind. Watch this today. Let's see where this thing closes today. It's been great for buy signals and sell signals of the market. All right, and the dollar got hammered today, literally got hammered today. Now you have to say, okay, I do think that the dollar is going to catch some sort of a bid, but I would not be looking for anything really to trade on. But we have to keep an eye on a lot of these dollar pairs, actually, because if this starts to continue to break down, we're going to have some exciting moves to the upside and or downside, depending on what you're looking at as far as the dollar is concerned and dollar pairs. But keep an eye on this. Let's see if we can get some sort of capitulation and then pop back up to the upside. A lot of work to do, as you can see, 20, 50, 200. We're still way below that, and we had this big engulfing move lower. So we'll just keep an eye on the dollar. But weaker dollar is going to boast a lot of the commodity sector, right? A lot of the precious metals, gold, and of course crude oil and a lot of the grains. So just keep an eye on this. If you do trade commodities, the dollar is definitely something that you want to be keeping an eye on. Here's the CBOE. As you can see, closed bullish back into the 80%. We had that big fear spike, and then we went closed back down again. So just showing you there's absolutely no fear. Greed is at work, and it's something that you got to pay attention to, because when we get too complacent, that's when the markets actually step back in. Remember, the markets are made to fool the masses, so just keep that in mind as well. All right, crude oil, no trade here for me. I'm looking for a big flush down here. We got a little thin zone on our volume profile, so if we can literally lose yesterday's low, then I think we can get a flush back in here. For a trade, I would be interested in testing a 200-day moving average pop, and of course your stops would be below that. But right now, I think oil, right as you can see here, the 20-day moving average lower. We have a bearish symmetry intact here, and of course we have bearish profile here, as you can see, lower lows and lower highs. So just keep that in mind. So to me, as of right now, oil, no trade. Now, as far as gold is concerned, we did break bearish symmetry, right? We had lower lows and lower highs, downtrend, and now we just broke back above. We're still below the 50-day moving average, but it does need some work here. So maybe if we can get that big move up, this is going to be ideal for looking to get short. Okay, or if you're looking to play counter trend, you got to be careful, and you got to be moving real quickly when you're trading gold, if it's not for obviously a day trade. And here is the diamonds, which is the Dow Jones ETF. Just wanted to show you, as you can see here, now we're testing this long-term uptrend line from November 2012 lows. We got back above the fib cluster, and of course we held that 200-day with a nice doji indecision candle. So really nice move, but again, we are now testing below it. So logically, the markets should and probably will either pop up a little bit, maybe drift lower, sideways consolidation, which is actually healthy for the markets, especially when you have an explosive move like this for the last 5 days. Caught everybody off guard as well. And now we're back up in here. We're probably going to look to test this area here. So would not surprise me if we got another move higher. But today is Friday. So again, keep it light. Be careful here, guys, because this is just something not right about the rally. And after this move up, it's just I do see some cracks from a lot of other indicators that I follow. Too many indicators to put in a small video here, but I just want to let you know, just not that it happens, just something that that I'm just a little cautious about. Let's just say that. Here is wanted to show you also this double top area. So we're coming into resistance here. So let's see if we can either break back out, and sometimes the market actually pops higher, breaks out of it, gets everybody stopped out, and then the market starts to roll again. So this is why I'm really cautious at these levels here. Okay, here is the 30-minute chart of the Bollinger Bands. Again, we had that little squeeze, and on the Bollinger Bands, and then we broke back higher again. So we're going to need a little bit more consolidating here to get more energy. IWM is one of our leaders, as you can see. broke back high, made new highs again, and now we're getting a little bit overboard again, but again, that is not a sell signal as well. Decent volume yesterday, so we broke back above it. Let's see where it goes today. But again, longer term picture on the weeklies charts, guys, they look great. Transports did its thing as well. Did break out, not making new highs, but again held, and we are in this now double top formation as well. So let's see if we can get enough steam here to push out to the upside. My guess here is that if the market does pull back, this market will be bought with two hands heavily into a push for the end of the year. Okay, and that's where your stock picking expertise is going to come into play. So if you can get some good quality stocks that have pulled back but held in this downtrend from last week, which ended, that's where that's going to pay you really well. Here's Goldman Sachs. Goldman had earnings yesterday. Really took a big hit, but then actually recovered nicely. Now Goldman here is in this area here, back up in the support area, as you can see, which is, let me get that right here. Just move that out. So we're in support here. I still like Goldman to the upside. I think Goldman is for a play. I mean, you can really trade it from here, from yesterday's close or high, and see if we can get back momentum to the upside, or at least wait till it gets back above 160 and then trade it, or give it a day or two until it bases and see what happens. I like to give it some time, let it base for a couple days. Usually, when you have some bad earnings, it usually takes a few days for it to base, sometimes even a week or so, and then the markets start to pick up momentum again to the upside. So Goldman here, keep an eye on that. The bank sector itself looks great. XLF, this is exactly what we want to see. Big follow through, big movement in the banks. That is a very, very good sign that this market is in fact starting to hum on all cylinders. Remember, technology was actually fantastic. Look at the let me just show you the cues real quick. Made new highs. So this is really, really good. This looks fantastic for and setting up nicely for an end of the year rally. That Santa Claus rally. And ideally, we start getting some strength the first week of November, the end of October, the middle part of the last week of October, going into November, and of course December. So any pullbacks should be bought into and start building some good positions. As of right now, I'd like to see a pullback before I start buying into this market. But lastly, is Apple. I want to show you. We hit our first target of 504. We did say above 497. We're looking for 494, excuse me. We will look for a 505 target, and then of course a 520, 518 to 520 target would be the next spot. And that is actually heavy resistance, so I would use a lot of caution here on that. All right, guys, that's really it. This weekend we'll do a lot of work, a lot of analysis, and we'll have a big and full report as usual on Monday. Have a great weekend. Be safe out there today, and we'll speak to you on Monday. Take care.